Hello, this is Chuck Carnevale, and one of the most commonly asked questions we get from subscribers is what's the best metric to utilize when evaluating MLPs? And with this helpful hints video, I'm going to take a look at or give you some insights into how I personally evaluate MLPs, which I might add I use very sparingly, if at all, in my own portfolio. In my opinion, there are several problems when attempting to evaluate an MLP. First of all, they have very complex capital structures. They tend to be very capital intensive, and then I'll show you in a few moments that one issue that I have with MLPs that is often ignored is that they tend to be very dilutive investments to their shareholders. What I'm saying here is the companies are constantly issuing additional shares. So from that perspective, as I'll show you in a moment, it gets very difficult to compare historical earnings to current earnings because the share counts become dramatically different, as I'll illustrate. However, with that said, as I recommend when subscribers are looking at any business, I always say you should take advantage of all the analytical horsepower that FastGraphs offers. Now, I've got the premium version of FastGraphs up here. So to me, one thing about MLPs, and as a general statement, is they tend to be very yield oriented or very dividend oriented. Their primary lure is for their income, although they can generate capital appreciation as well. But it's really for high income is one of the biggest motivating factors for purchasing an MLP, at least in my opinion. So when I'm looking at that, I can look at adjusted operating earnings, for example, but they don't always tell you the story, as I'll illustrate, as I mentioned earlier, later in the presentation. But I would also then always look at diluted or GAAP earnings. And as you can see in the case of Buckeye Partners here, there's not really a valuation reference with diluted earnings because, again, there's some accounting adjustments that are being made here that you didn't see in operating earnings. But since these are income-oriented investments, I think it also makes sense to look at operating cash flows because obviously cash flow coverage is what's going to really determine whether or not the dividend can be paid or not. And then, of course, I would also recommend looking at free cash flows, which are available to both basic and premium subscribers. Additionally, and again, when you look at Buckeye Partners, you know, they do generate free cash flow, which is important, which means the cash available after operating their business, but they're not necessarily covering their dividend with free cash flow. Then for premium subscribers, you can also take a look at EBITDA, or earnings before income taxes, depreciation, and amortization, in order to see if the company's generating enough what I'll call gross earnings to be able to support and maintain their dividend. So I look at all of these factors when I'm evaluating any investment, MLPs notwithstanding. However, as I previously mentioned, there's a real problem that I find, or real challenge, I might say, that I find with dealing with MLPs. For example, I'm using the financial underlying numbers or fund graphs, and I'm going into the in millions graph, and I'm going into the income statement, and I've clicked the button here, common shares outstanding, which is essentially looking at their capital structure from a standpoint of how many shares the company has outstanding. And what you'll see consistently with most MLPs is they tend to be very dilutive. For example, in the case of Buckeye Partners here, they went from 24 million shares in 1996 to 130 million shares by the end of 2015. So when you're looking at earnings and cash flows for 1996 on a per share basis, which the basic FastGraph is iterating, you got to realize that those numbers or those metrics are being divided by 24 million shares, whereas in 2015 they're being divided by 130 million shares. Another example and widely followed MLP is Energy Transfer Partners, and once again you'll see with this MLP they went from 13 million shares in 2003 to 506 million shares in 2015. MLPs tend to be very, very dilutive. I'll go through a couple more here quickly just to illustrate this point. This is Global Partners LP, and again you can see they went from 6 million shares to 34 million shares. This is something that I have seen consistent with virtually every MLP that I've ever reviewed, and I'll just run through a couple of more examples here. With Magellan Midstream Partners, one thing I'll say about them, they've maintained a relatively flat share count since 2009, but still looking back at historical numbers, they went from 45 million shares to 228 million shares. So one thing that you should do if you're not a premium subscriber to FastGraphs, I believe you should be evaluating their historical share count so that you at least understand that these companies tend to be very dilutive relative to their shareholders. Here's Plains All American, another widely followed MLP that went from 34 million shares in 1996 to 660 million shares through 2016. So MLPs tend to be very dilutive in However, as alarming as all this dilution might appear, it's important to recognize that these companies are constantly raising capital to make strategic investments in additional infrastructure, etc. So I'm going to add gross revenues here, not per share, but gross revenues. And as you look at Buckeye Partners here, you can see that their gross revenues went from $183 million to $3.2 billion. So therefore, going from 24 million shares outstanding to 131 million shares outstanding, even though that was very dilutive, it also provided the company the ability to generate all this significant revenue growth. I'll look at one or two more here just to make this point clear and try to keep this video as short as possible. Here's DCP Midstream Partners. Once again, watch how much significantly higher the revenues are versus the common shares outstanding. Sometimes if you do this in a line graph, you can see the perspective better. This is the common shares outstanding we were looking at before. This is the total revenues. Once again, common shares outstanding went from 18 million to 115 million, but revenues went from 437 million to 1.8 billion. So even though these companies are dilutive, I guess you would say the counter to that is by issuing new shares and then reinvesting in additional infrastructure, for example, adding new pipelines, etc., depending on the type of MLP, their revenues growth is substantial. Here we have Enterprise Products Partners, EPD. Their common shares went from 220 million to 2.1 billion, but their revenues went from 739 million to 23 billion. And obviously, that's where they were able to raise their dividends and continue to increase their dividends going forward over time. Cash flows per share numbers are difficult is what I'm really trying to suggest here, but you have to look at the gross amount. As you can see, Enterprise Partners increased their dividend at a very high rate. They generated a significant amount of total cumulative dividends. Their capital appreciation was superior to the S&P 500, as well as their total annualized rate of return. So even though these companies are very dilutive and their capital structures are complex, they can be very excellent investments over time. Now, I've gone back to the fast graph on Buckeye Partners looking at adjusted operating earnings here. And I'm going to show you a little trick that I found. I'm going to readily admit that I do not consider this to be necessarily sophisticated financial analysis, but there's something that I discovered when evaluating MLPs that I find very interesting. Since these are primarily income-producing investments, what I like to do is I like to go down to the orange navigation bar, and I like to take everything off of the graph except dividends. And what I've discovered is, and again, this is not very scientific or sophisticated, is that there tends to be a very high correlation with most MLP stock price and the amount of dividend income that they pay historically over time. In the case of Buckeye Partners here, it's almost a perfect iteration. You can see this being the dividend yield line. This is a 6.8% current yield. You can see that when you buy the stock, or if you invest in this MLP, when the stock price is above the dividend line, we'll call it, that's less optimum than if you can find times to buy it when it's below the dividend. And once again, you'll find this with numerous MLPs. Now, at this point, I'm going to very quickly go through several of the examples in a portfolio I built called Helpful Hint MLPs to illustrate this relationship between MLPs' dividends and their stock valuations. Here we have DCP Midstream. You can see a period of significant undervaluation relative to the dividends. And again, you can see that occurring again recently. These are not perfect correlations, but in my way of thinking at least, you get some pretty extraordinary valuation models by looking at just the MLP and their price relative to their dividends. With Enterprise Products here, you see there's again, just like we saw with Buckeye, a very high correlation. This is a period of high overvaluation relative to the dividend. This was a period of undervaluation relative to the dividend. And as I go through these MLPs, you're going to see this relationship show up over and over again. Here's a case where Energy Transfer Equity got extremely overvalued, became extremely undervalued, and then is reverted to the mean. There does seem to be a high correlation to long-term valuation to MLPs and their dividend over time. Here's Energy Transfer Partners. Again, you see a very highly correlated relationship between the company's dividend and its share price. So I'm not necessarily suggesting that this is sophisticated financial analysis, but these correlations seem to be uncanny to me. Even in global, where you saw the dividend cut here, you saw the price drop dramatically, and now the price is moving back towards its reset dividend yield in this example. Magellan Midstream Partners is another example where you saw a very high correlation. We've had significant overvaluation relative to that dividend line, and it's hard to say whether or not this stock is coming back to its dividend line or not, but it sure shows some tendencies for that to happen. Here's Plains All American Pipeline, where again you see a very interesting correlation between the company's price and the dividend yield. Once again, a dividend cut leading to significant drop in stock price and possibly undervaluation as the stock price may be moving back to its reset dividend. Now I want to show you an example here that I consider to be very interesting. We'll look at Star Gas Partners LP. And what's interesting about this is there was kind of this correlation between the dividend and stock price back here in 1998, and then all of a sudden the dividend was cut and eliminated actually for 2005, 6, 7, 8, and the stock price of course collapsed, and it kind of floundered for a while even with no dividends. And then as the dividends started to remanifest, you once again see this correlation where you have the price kind of following or reacting to the dividend yield. So as I said, I don't necessarily consider this to be an extremely scientific or sophisticated financial analysis technique when looking at MLPs, but on the other hand, there does seem to be some very interesting correlations between the value of an MLP and its dividend yield over time. I hope this has helped you understand MLPs a little better. This has been Chuck Carnevale saying thanks for listening, and I hope this helps you analyze MLPs better by using fast graphs. Thanks for listening.